Hi everyone, welcome to Full Circle Trader. In this video, I'm going to talk about a very important topic, which is trend analysis. As a trader, we know that trend analysis is so important that it should be there in every trader's kitty. Now, it doesn't matter what your trading style is, whether you are a scalper or you are an intraday trader, swing trader, or a positional trader. Trend analysis is such an important tool that if you don't know how to analyze a trend, maximum number of times you will be taking that trade in the wrong side. So keeping in mind the beginners or the novice traders who have just started out, I have created this presentation, and I hope that after watching the entire video, you will be in a position to understand how to analyze trend. Not only the trend, you will also be able to understand that what is a quality trend, when to take the trade, which direction of the asset price will move, and also you will be able to understand that which trends are not quality trends and we should not enter into them. So with all those things keeping in mind, let's get started. So I want to request that all the beginners, all the novice traders who have just started out, please watch this entire video, because this video is gonna help you in a big way to understand how to analyze the trend and how to understand that where to keep your stop losses, where to enter into a trade, how to trail your trade. And the most important point that I'm gonna cover in this presentation is that how to manage your trades properly. I'm sure that you must have seen so many other videos on YouTube about trend analysis, but in a very few of them you have seen that people are talking about the trade management. So trade management is a very important topic. Many a times we know where to enter, where to keep the stop, but once we are into a position, we don't know how to manage that trade, when to exit, when to trail your stops, how long this trend can sustain. So all these points, which are very important for a trader, I'm going to cover in this presentation. After watching this presentation completely, you will be in a position to define what a trend is, and you will have the entire clarity regarding this topic. So with that, let's just quickly move to the next slide. Okay, so let's start with the basic first. So what is a trend? So it means that when a price of an asset or the overall market moves in a particular direction, it is called a trend. The trend stabilizes itself in form of recognizable pattern. Like, for example, an uptrend gets established when it forms the series of higher highs and higher lows. Below is the example or a small picture of uptrend. As you can see that it has formed a higher high here, then a higher low, and then again a higher high. So this is how a trend establishes itself. Now, this slide is very important because I have intentionally give it a heading as misconception of the trend indicators. Now, there are many novice traders or the beginners who try to understand the trend through various indicators which are available nowadays in their trading platforms. And the most common of them is the trend line. So what they do is basically they draw the trend line and they believe that when this trend line will get broken, the trend will get changed. But that is not the case. And same is the thing with moving averages. Many people call it a dynamic, support and resistance. They believe that, when prices moves above or below or breaks above and below a moving average, any particular moving average, they think that the trend has been changed. Most of the people have used simple moving average, exponential moving average, and there are a couple of them other moving averages as well. So let me tell you that moving averages, although they help in speeding up your analysis, they help in understanding the direction of the trend, but they do not work as support and resistance. They do not establish the trend. All the indicators, they just follow the price, and that is why our main focus should be on what prices are doing. We should move with the price instead of the indicators. And I'm sure after watching the complete presentation, you will not rely yourself on all these indicators which are mentioned over here, because they are just many a times, most of the times, they just give the misleading information. Because as and when prices moves up and down, they wiggle around, these indicators start to give a wrong picture. So same is the case with these, Elliott waves, Bollinger Bands, channels, Gann lines. So all these indicators, they are kind of, indicators which, this industry has kind of created, kind of gives a picture to the retail trader that if they follow these indicators, they will get that holy grail of making maximum profit in most of their trades. But believe me, that is not the case. If you will understand, the basic thing, which is price, how they form, trends, how they form support and resistance, trust me that you will never gonna get, fall into any sort of indicator trap. In fact, you will remove them. You will, get rid of these indicators, as soon as possible. So that is why I have given a quote at the bottom, that price is king, and you don't need anything else, to understand the trend except the price itself. Okay, so there are basically these three types of trend. So we have uptrend, then we have sideways trend, and then we have downtrend. So at any point in time, the market will be in either of these three trends. Either it must be in an uptrend or downtrend or sideways trend. So as you can see, for the sideways trend, as per our guideline that we have created for ourselves, a minimum of 3 touch is required at the resistance and support to make it a sideways movement, right? For the uptrend, it should have at least 2 higher highs and higher lows. And for downtrend, it should have at least 2 lower highs and lower lows. So I'm going to cover all these 3 types of trends, with examples. So don't worry about that. As we progress in the presentation, the clarity will start to come in your mind. So do not get worried right now. I will tell you, in detail that what is an uptrend, when it forms, when a new trend starts, when a trend gets, when a trend ends. So I'm going to cover all this topic in this presentation. And as I have, mentioned earlier in the beginning of the presentation, that if you will watch the complete video, you will be in a position to understand the trend analysis like anything. And at the end of the presentation, I have also kept a practice chart. But that will help you even better to understand how trend works. So with that, let's just move on to a different slide. Okay, so this is the example of, a real example of the trends. So as you can see, we start with here from the left side. So this is the uptrend. Now, why it is an uptrend? Because it is creating higher highs and higher lows here. And it is how, this is how uptrend works. This is the sideways trend, where it is, prices are overlapping each other. These bars are, bigger in ranges, and they are just moving up and down. There is no direction clarity on this chart. And this is the downtrend, which is creating lower highs and lower lows. So this is, this is the real chart. These are the real examples of how trend works or how they moves in a particular direction. So I hope that with this, real chart, you will get some clarity on how trend moves and how to identify it. Now, a very important question is that what is a trend quality? And if you have seen other videos on trend analysis, I'm sure that, not many people talk about a trend quality. But as a trader, it is very important to understand the quality in a trend. Because let's say if prices are in an uptrend, but the quality is not there, there are chances that you might fall into the wrong side of the trade, or maybe you enter into a trade, but it will not work out and it will hit your stop. So let's define what is a trend quality here. So quality in the context of trend can be defined when something is easily recognizable, controlled in movement, and predictable. So what does it means is that when it is a trend, it must have such a fluid movement. Let me just draw it here. So a uptrend should be so much in fluid movement that you can very easily recognize it. And when it pull back, so these are the pullbacks in an uptrend, but they should be in a very controlled way. These pullbacks should not be like that prices starts to move up and then you have a pullback, which is something like this, and then you again have movement to the upside, and then you again have pullback which has broken the prior low, right? Then it again move and then it again come back, and then so something like this means that although prices may be in an uptrend, but there is no quality in it. So quality means that it will form a pattern, which is very controlled in its movement, which is easily recognizable, and you can predict it. Now prediction doesn't mean here that you will know that what is going to happen in the future. Nobody knows it, but the pattern will help you to predict that if this is what has happened, if this is how the prices have start moving from its base, it might reach up to this level, in the same manner. So this is what quality tells us. So the quality in trend can be seen when it has controlled arrangement of price bars, controlled pullbacks to minor support, resistance, or created. So what is minor support resistance? We will go and see. I'll talk about it. But as I mentioned that, a controlled arrangement of price bars is very important. And we will see what is controlled arrangement in the next slide. But, for now, please keep these, words in your mind that whenever there is a trend, the bars, so if it is a downtrend, the red bars should be very fluid way. It should come down very controlled way, and when it will rally back, it should not be a powerful rally that will extend up to its high from where the downtrend trend is started. So poor quality trend can be seen through the uncontrolled and erratic price arrangement of price bars. So this is the example which I have just given here, that let's say if it is a downtrend, then the rally comes, which breaks above this lower high, then it again come down, breaking below this low, and then it again move back. So this is called uncontrolled behavior of price. And when such kind of price bars forms, or when you see such kind of trend, do not trade that trend, because there is no quality in it. The arrangement of the bars are not controlled, the pullbacks and the rallies are not controlled, and they are so erratic in nature that anytime when you take the trade, it might just go and hit your stop. So this is the example of what a picture of a quality looks like and what is the picture of poor quality looks like. So as you can see, the price bars are so fluid in their nature that you can easily recognize it. Now tell me, as a trader, when you see such kind of trend, when the open of this bar is next to the close of this bar, and the same way it just moves down, right? Can't you predict it? Can't you see and easily understand that this is a very powerful downtrend, and you should enter into this trend to make use of this a good quality trade? And in the same way, when prices turn to the upside, they again have the same kind of pattern here, where the close of this green bar is next to the open of the next green bar. So this is called a fluid movement. This is called a good quality trend. And until you see such picture on your real charts, I would suggest not enter into the trade until and unless you do not have the sufficient experience, because only when you enter into such kind of good quality trades, out of 10 trades, your 5, 6, or 7 trades will work out, and they will work out and reward you very handsomely. Now this is the picture of poor quality trade, and you can see that how prices are overlapping each other. Now to make the difference between that what is the good quality and what is a poor quality, it simply means that here you have opens and closes next to each other, and prices are moving in a very fluid way. Whereas in this picture, the prices are overlapping. So let's take an example of these two bars. This bar opens here and it closes here, and the next bar after it has an opening more than 50% of its prior bar, and then it's closed below it, right? Then you have this bar which again closes almost about 50% of its prior bar. So here the bars are overlapping each other so much. And in case of this, or just to define what a good quality means, a bar should not move more than 20% into its prior bar. So for example, if you have a green bar here, the next bar, if it is moves down but remains above the 20% of its prior bar, that is fine. That is again a good quality picture of a trend. But if let's say you have a next bar which moves more than 50% of its prior bar, then these two doesn't make a good quality trend here, because they are overlapping so much. And when you have overlapping bars, you cannot recognize it. you cannot predict the pattern, you cannot understand because there is no controlled price behavior. There are no pullbacks here, proper pullbacks or rallies here. Prices are retesting, every now and then. They are making higher highs, then they are making lower lows. So in such a scenario, you should always try to keep yourself away from the trade. Okay, now what we are going to talk about is the most important point of this entire presentation, which is pivot. Now, what is a pivot? It is the smallest unit of a trend, and they are no point of reference which are used as support and resistance. How do we use it as support and resistance? I will show you the real examples on charts, so don't get worried about them. Let's just understand what a pivot is, because if you will understand this concept, you will be able to mark the support resistance properly. And you know that as a trader, especially as a price action trader, the price support resistance are such an important thing because they tells us where is the supply, where is the demand, and most importantly, when there is a shift into the power from supply to demand or demand to supply, right? So which makes this concept very important. So a pivot starts to form with higher low bars on both sides of a bar, which is called pivot low. So what it is talking about is this example. So it says, let's just understand it very clearly. A pivot starts to form with higher low bar on both sides. So these are the higher low bars. Now, why these are the higher low bars? Because this bar has the lowest low point. And all these three bars next to it or either side of it has their lows which are above this low, which makes them higher low bars. Second is lower high bars on both sides of a bar, which is called pivot high. So now it is talking about this example here. Now these bars have highs which are lower than the high of this middle bar. So this is called a pivot high. I hope that you are trying to understand that what exactly a pivot high and pivot low here is. A pivot high forms when you have lower bars to its either sides, and you have a pivot low when you have higher lows to its either sides. Now the question comes, how many bars to its left and right will make it a pivot high or a pivot low? So for our purposes, for our convenience, and with the experience that I have gained over the years, I have made it a rule, a guideline for myself that whenever we have at least 3 bars, on the either side of a pivot high, we will call it a pivot high. I will show this on, on a real chart with example that when, exactly a pivot high forms. But keep this thing in your mind. We cannot call a bar a pivot high bar until it has 3 lower high bars to its either side. And similarly, we cannot call a pivot low bar a pivot low until it will have the higher lower bars to either of its sides. Keep this concept in your mind. If you don't understand it at in the first time when you watch this video, come back to this page, come back to this section of the video and watch it multiple times until you grab this concept well. If you have any questions regarding, or if you have any difficulty in understanding this concept, you are most welcome to ask your questions down below in the comment box. Now, these pivots become very useful in determining the trends, trend change, and most importantly, in the trade management. So as I mentioned in the beginning that, in most of the other trend analysis videos, which are available on YouTube, very few people talk about the trade management. Maybe either they don't understand the concept, or how exactly to manage a trade when you take the position. So here, the pivot comes as a very handy tool, and I'm going to show you that. So just stay with the video and I will tell you, how exactly these pivots are formed, how they will help us in marking the support and resistance which actually works and not just the indicators which many people rely on, right? So with that, let's just quickly move on to the next section. Okay, so as you can see, this is a Maruti Suzuki chart. This is a real-time chart. And now what we're going to do is we're going to mark the pivot highs and pivot lows on this chart here. So I want you to just take few seconds, look at the chart properly, and try to identify where is the pivot low, where is the pivot high. I have given you the tool, I have given you the guideline. that a pivot high can only be formed when it has three lower highs to its both sides. So just have a look at this chart and mark them. Okay, now let me help you in marking these pivot highs and lows. Okay, so now as you can see, I have marked the pivot highs and pivot lows. And as you can see, why this is a pivot high, because it has three lower highs to its both sides. Why it is a pivot low, because it has three bars, three higher low bars to its either side. And in the same way, when you see it, you will get the same thing, up until here, that all these pivot highs and pivot lows has three, at least minimum of three bars. Now, if you will ask me why three bars, why not 4, 5, 6, 12? So let me tell you, frankly, that the more number of bars you have, the more, bigger confirmation it will give you, or the strength it will give you about the pivot. But it's entirely up to you how many bars you want to select for yourself. I select three bars for myself because for over all these years since I have started trading, I have found that three works just fine, and it works for me. And that is why I'm telling you that maybe if you wait for six bars to form for a pivot to happen, by the time it will form, you might just miss the train and prices will shoot up to the either side, either downside or upside. So three works just fine. You can just have my words for it, practice it. When you watch the complete video, just go back, open the charts and try, do practice, as much practice as you can. Try to mark as many pivot highs and lows for yourself, and I'm sure that you will be able to grab the concept well. If you think that three is too less for you, you can go for 4, 5, as many as you want. With that, let's just move on to the next slide here. Okay, so another very important slide. And let me give you an example here, that whenever we start a new job, our company gives us trainings and gives us job aids or certain other guidelines which will help us to perform our daily routine work in the right way, or in the way that company expects from us. Trading is no different, and that is why we should have certain guidelines which will help us in taking the right decisions at the right moment. And which is why I have created these trend guidelines. Well, these trading guidelines have not just come from anywhere. These guidelines I have created with experience, with the trades which have gone wrong, the trades which have gone right. I have analyzed them. I have a big book, PDFs and physical trades that I have taken a printout of, which I have taken in the past. And when I analyze them, I come to these pointers that this is how things actually work, and which is why I'm sharing these guidelines with you. Now, I don't want you to completely rely on these guidelines. I'm giving you as a helping tool, because if you are new in trading, you can use it, make yourself strong, and once you have sufficient experience, you can always modify these guidelines or create your own one. So for the trend, the guidelines which I have formed for myself is that an uptrend is defined when it should have at least two higher highs and higher low. Only then we will call it a uptrend. Now, within an uptrend, a pivot low prior to higher high is a major support. Now, we're going to see all these examples of major support and major resistance in the next slide. But let me just give you an example over here so that you don't get confused. Now, what I mean to say by this point here is that when you have a series of higher highs and higher lows, so as we mentioned that there should be at least two higher highs and higher lows. So where are the higher highs and higher lows? These are the higher highs and these are the higher lows. The second point says here is that a pivot low. So this is the pivot low prior to higher high is called as a major support, right? So when an uptrend is forming, and whenever this pivot high or higher high is taken out by the prices, a pivot low prior to this will be defined as a major support area. Now, if you still don't get the concept, don't worry, I'll show you these on the real charts, and then probably you will be able to understand them better. For now, let's just understand what guidelines says here. So break below the major support in an uptrend will end that uptrend. So what I mean to say here is that if you are in an uptrend, right? Because we have at least two higher highs and higher lows. So we can say that this is an uptrend. Now, whenever the prices will, break below the major support, where is the recent major support? It's here, right? So it says break below major support in an uptrend will end that uptrend. So whenever the major support will get broken, it will end that uptrend, right? So keep this in mind. This is a very important guideline. Let's say you have taken the position when the uptrend started, but as and when the recent major support will get broken, that would mean that now the market is not in an uptrend. But it doesn't mean that now the downtrend is started. No, don't get confused here. An uptrend will end when the major support is broken. But to have a downtrend, the rules applies in the same way as for the uptrend. A downtrend is defined when there is at least two lower highs, pivot high, and lower lows, pivot low. So what is a downtrend? When you have at least two lower highs and two lower lows, right? So we have three lower highs here and we have two lower lows here. This is called a downtrend, which is not the case in this example. So although the market is not in an uptrend because this major support is got broken now, but it is not in a downtrend as well, because to have a downtrend started, we need at least two lower lows and lower highs here. Now within a downtrend, a pivot high prior to lower low is a major resistance. So what does it mean? A pivot high, which is this this pivot high here, prior to this lower low, is a major resistance. So likewise, you have major resistance here, you have major resistance here, right? Because all these are pivot highs, and any pivot high prior to lower low. So for this pivot high, the prior lower low is this one. For this major or this pivot high, the prior lower low is this one. And likewise, it will keep on moving like that. Now break above the major resistance in an, I'm sorry, this is not an uptrend, this is a downtrend here. I think this is my typing mistake. Will end that downtrend. So what does it mean? You have a series of lower lows and lower highs, and you have major resistance along the way. But whenever this major resistance got broken, right? So now we have a price movement that has broken the major resistance, that will end this downtrend. Again, the rule says that it is, although this downtrend has stopped, but there is no uptrend, because to have an uptrend, we need at least two higher highs and higher lows here. So hope the concept is getting a little bit clear in your mind. Now we will go ahead and see the example of it, so that now you will completely understand what do I mean by these guidelines here. Okay, so what we are going to do is we're going to mark all the major resistance and support in this chart, which is of Bajaj Finserv, and this is a real-time chart, right? So let's go ahead and just mark the major support and the resistance. Okay, so these are all the major support and major resistance that I have marked on this chart here. Now, why these are the major support areas? Now you can see, I have given you the guideline, and that will help you to understand that why these are called as major support. So this is the lower high, a pivot low point prior to the higher high here. So this is the higher high, and we have this pivot low here that makes it a major support. When it will become a major support, when this higher high will get broken. So prices have moved up, it has taken out or moved above this higher high, that made this pivot low a major support. Similarly, we have the lower high here and lower high here, and which is why these are called the major support areas. Now what has happened here is that prices were in an uptrend, but suddenly a down move came and it break below this major support area. Right now, our guideline says that whenever a major support in an uptrend gets broken, that ends the uptrend, and this is what has happened here. So it has ended the uptrend. But if you remember, I said when an uptrend gets broken or when an uptrend ends, it doesn't mean that a downtrend is started. And you can see that here. For some time, prices consolidated below this major support area, but then again buyers stepped in and prices moved above this higher high here, and which made this pivot low a major support. Similarly, we have a major support area here as well. Now, what has happened here is, again, prices moved below this major support, which has ended this uptrend here, but then prices consolidate below, and it again, moved down, and it moved below this lower low here. So we have first low here, and then we have lower low, right? So this lower low means that, now not only the uptrend has, end, but now we are also having a series of lower lows and lower highs here, right? So that means that this uptrend is now over, and we are now in a downtrend, and that is why we are having major resistance areas, getting formed in this downtrend, right? So now that leads to a question that when does a trend end and when it is a new trend? And we have to ask this question to ourselves as a trader, that how do we know when a trend is actually end and when a new trend is emerging, or when a new trend gets started? So a trend ends when it is no longer meets the definition. So what does it mean? It simply means that we have a guideline for an uptrend, which says that when there is a series of at least two higher highs and higher lows, no, it is an uptrend. So when that series stops to continue, when there is no higher highs and higher lows forming, it means that the uptrend is not meeting its definition, and so there is no uptrend anymore. The end of the trend, can be identified when major support in case of uptrend and major resistances in case of downtrend gets violated. So we have just seen it through a couple of examples that, in an uptrend, when your major support gets broken, it means that the uptrend is over, and same is the case with the major resistance area, right? So in a downtrend, when your major resistance get broken, it is no longer meeting the definition of a downtrend, and it means that that trend is over. Whenever the major support and major resistance will get broken, it will violate the trend line every time. So do you really need one? Now, mark my words, this is very important, and it will clear your doubt, especially if you are a new trader or a beginner. Trust me, think logically, ask yourselves. We have a definition, we have the guidelines of an uptrend and a downtrend. Every time, right? Trust me that every time when your major support will get broken, your trend line will also get violated. So do you really need to mark a trend line in your uptrend? I don't think. In my opinion, the answer is no, because when we have an uptrend, we always horizontally mark our supports and resistance. And when your major support gets broken, your trend line will also get broken. That is why there is no need for this tool. There is so much of hype which has been created around this tool in the industry, that especially the new traders, the beginners, think that they absolutely need the trend line on their chart, and if they don't have a trend line, they will get confused. They will not understand when the trend is over, when a new trend has been started. But after watching this video, I'm sure that you will not definitely gonna throw away your trend lines. All you need is a simple horizontal lines or zones that are that should be marked on your chart to understand where are the supports and resistance. Now that leads to another important question, that how do we know that when is it a new trend? So once your major support get broken here, right, you have then a series of lower lows and lower highs. This is a new trend here, which is emerging out of this uptrend when this major support got broken. To answer the question that how do we know when a trend is over, so when you have an uptrend and when you have a price that breaks below the major support, now we have the answer that the uptrend is not meeting its definition, which means that the uptrend is over. And then if you have the series of lower lows, lower highs, and at least two lower highs and lower lows should be there, now we know that now it is a new trend that is emerging out in this market. So that answers all those two questions here. Now, this is the one point which had been left out here. So it says that when two pivots get broken by one big bar, what does it indicate, right? Let me just clean this up. So what this point is trying to tell you is that, as I mentioned, that when your major support got broken, it means that uptrend is not there, but it doesn't mean that downtrend is started. And if you remember, we have just discussed it through some examples in the prior slides. But what this point is trying to say here is, let's say you are in an uptrend, but there is some news which broke out in the market, or something very big happen around the world, or like the wars or some virus spreading out, and you have markets which in just one big wide range bar or one big move, and not only your one major support, but it breaks your or it breaks your two major support areas. That means that not only the uptrend is over, but a new downtrend has also started, because now instead of one, you have two major supports which have got broken here. Now, why this is the case? Because out of 100, only or one or two case will be there as an exception, which will reverse back out this big move. Otherwise, let me just clean this one. Otherwise, when you have this big move down, it will definitely start the series of the lower lows and lower highs, and you will have a downtrend. But as a guideline that I'm trying to share here with you is that always remember that if your two major support gets broken in one or maximum two. Now, if I'm saying one, it doesn't mean that it's a it's a hard and fast that it should break two major support areas in one bar. But you could have, instead of one, you could have two big wide range bars that will break your two major support. That also means that your uptrend is over and new downtrend has been started. That answers your questions here. So that leads to an end of this presentation. And what we are going to do is that, as it is a practice time, so what we will do is that we will choose a starting point first of all. So this would be our starting point, and we are going to mark all the pivot highs and pivot lows, and then we will try to understand how the trend has started, what has happened in this chart, so that we can understand what are the key levels, what are the key points, and all those important points that we have covered in this video. We are going to apply this on this practice sheet here. So first of all, let me just mark all the pivot highs and lows here. So now we are all the pivot highs and lows marked. Now let's see what has happened in this chart. So as we start from here, this is the pivot low here, right? Why it is a pivot low? Because we have the recent low here, and this is the new high, new pivot high, or the new pivot high above this point here, which is why it is marked as a pivot low. Then we have this higher high, and then we again have this new pivot low here at this point. Now we know that pivot low, pivot high, when you have a series of at least two of them, it means that we are in an uptrend. So the uptrend has emerged here, right? We have series of two pivot lows here, and we have a series of two pivot highs here. That means that the uptrend has started. But then immediately after it, we have a new pivot low here, which has broken this pivot low, which means that this uptrend is stopped here. It is not meeting its definition. Then we again have a pivot high, which is below this one. Then we again have pivot high here, and then we have moved above this pivot high, which means that now again a new uptrend is emerging. Then we have a very nice uptrend to the upside, right? We have a new pivot high, pivot low here. Then we again have a pivot high. So which means that after this, a small momentum down move, we have resumed the uptrend here, right? So which means that the move which started from here is continued till here. Now, what has happened after this? We have a new pivot high, which is below this one. So now that should, keep, as a price action trader, should hit our mind that why, the stop, a new highs has been formed, stopped here, right? And then it has followed by a new pivot low, which is broken below this pivot low and this pivot low. Then we have a new pivot high, new pivot low, new pivot high, new pivot low, which means that not only this uptrend is over, but a new downtrend has also been started after breaking this major support here, right? So as I mentioned in the prior slide, whenever you are an uptrend, whenever your major support will get broken, every time your trend line will also get broken. And let me just clean this up. And as you can see, this sharp move here, right? It has taken out the major support in a very strong way. However, it failed to move below this second major support here is this is the major support, and this is also a major support. So although this is a very sharp move, but it has taken out only one major support, which means that this uptrend is not meeting its definition, but it doesn't mean that we are in a downtrend. Now the question comes, when a new trend is started. So the new trend is started when we have this lower high, lower low, lower high, lower low. And then we have this continue in this way. Then again, after this pivot low, we do not have a new pivot low here or a new lower low here. And then this pivot high, which was created here, was taken over by this new series here. So we have this pivot low, and we have this pivot low, pivot high, and likewise prices might have resumed its uptrend from here. So this is the way that we should read the price action. And trust me guys, in the second slide, all those indicators that I have shown you there, you actually do not need them, because what traders do is they started following the indicators, then they become very reliable on them, and then they just stop using the price action. They just stop seeing what is actually happening on the charts. Always keep this in your mind that indicators also follow the price, so there is no extra information edge that they are giving you. So you should rely only on price action, the actual price patterns, and not on the indicators. So with that, we have come to an end of the presentation. Hope you have liked it. So if you have any questions around this video on trend analysis, please ask in the comment box below, and I would love to answer your questions. And trust me guys, it takes a lot of effort in making these videos. So please, if you like the video, please give it a thumbs up, like the video, subscribe it, and please share the channel with your friends and family. It would definitely encourage me to come up with more such videos, which I'm sure that will definitely help a new trader, and it will also help them in not losing the money and taking the informed decisions. So please like the video, and please subscribe the channel again, and if you will subscribe the channel and share it with others, it would definitely encourage me, and I would really appreciate it. So with that, let's just call it a wrap, and catch you soon in the same interesting and wonderful session. Till then, take care of yourself, take care of your parents, and please save water. That is very important. Good luck for tomorrow. Bye-bye.